Hello everyone, thanks for joining us this Saturday morning and welcome to this educational presentation of how to catch tops and bottoms in all markets. Now I can say with some validity behind this that I would believe that most people, I would say upwards of 3/4 to even 80 to 90% of all people have been taught to trade by catching bottoms or tops. In other words, buying low and selling high. This is the way the majority of us are taught as traders, and this is probably one of the most basic formats in which to trade for all markets, all time frames. But for some reason, there really is no consistency in this type of trading. For example, let me share with you this chart here. This is a chart in LB going back a ways, and this is the way most people trade tops and bottoms. All right, we're looking at this chart. We see we've had a rather steep decline. And let's say that you're looking at the indicators, okay? You follow a couple of indicators. They're tremendously oversold. You've never seen them at this lowest level before. So you decide to jump in and buy because you think it's going to have a nice quick bounce. You'll make a few bucks to the upside. So you decide to buy, and then this happens, okay? You're a little bit perplexed, wondering like, well, how come it didn't work? I thought the indicators were supposed to pick these tops and bottoms here. But then you go to a chat room or maybe a trading room, and someone who's been trading for a while says, no, this is the bottom right here. This is where you want to buy. Maybe you got in just a little bit too early. So in all actuality, it's okay to buy here. So you step in and double down, and then this happens. You don't really go much higher, but you actually are still trading lower. Now, let's say you purchased some brand new trading system for $5,000, $10,000, and it tracks all of the institutional workings. It tracks all what they're buying and selling, and this is actually saying that this is a very big support level according to the institutions, according to the volume, according to this special system that they trade off. So you've got to buy here. Because you think, maybe I got a little bit too early, but now I'm going to really put it all in here, so I'm going to buy right here. All right, so you're tripling down, and then this happens. Does this look familiar to anyone? Okay, this is the way most people trade tops and bottoms. Every once in a while, what you're relying on, either some indicator or some system you've purchased that tracks all the institutions and what they're supposed to be doing, will work, but most of the time it looks like this. Well, take it from someone who used to trade this way some 40 years ago. I know what this is like, because this is the way I was taught to trade, and this is what usually happened over time. Every once in a while I'd have a good trade, but most of the time it wound up looking like this. Well, today I'm going to teach you a great entry technique that you'll be able to start implementing as soon as Monday, where had you known this in advance, rather than buying all the way down, what you would have done is use this technique for catching tops and bottoms and potentially been able to capture upwards of 40 points, okay? This is a really great technique. I learned this from the floor on the exchange from my mentors, and I'm going to share it with you today. So this promises to be a great presentation. Welcome. My name is Steven Primo. I am the president and founder of Specialist Trading. If you are new to my Saturday presentations, we are all about educating you. We are a little bit different from other webinars in that our sole purpose is simply to educate you as a trader. We don't promise to have the best system around. We don't promise to have the best strategies that generate thousands of % per year. In fact, we don't believe in any of that. We don't believe in statistics. We believe that if those things were guaranteed to make you money, the way I would say the majority of all websites have this standard format, well then most traders would be making money and be profitable. But unfortunately, the statistics are the reverse. Most traders fail. In fact, upwards of 80% of all traders fail. And we feel it's because of this very reason, because there is no holy grail. There is no magic system or trading method or trading plan. What there is that will sustain you is education. And education is what has been missing for most traders' trading plan. See, most traders rely on someone or something to tell you what to do. You buy this system or you buy this trading room subscription, and then someone's supposed to tell you what to buy or sell on a nightly basis. And that's a recipe for a disaster, because you're taking yourself out of the game. What I've learned in my 40 years experience as a trader is that the only thing that will sustain you is sound fundamental education, and then making your own decisions, not having someone or something make them for you. So that's what we provide at Specialist Trading and Pro Trader Strategies. All the things I've accumulated in my 40 years of trading, from when I was trading on the floor of the stock exchange to when I was managing money to what I do now, to teaching students around the world in over 110 countries and in virtually every state in the United States. We give them all the things that I've shown to have consistency, and then let you run with it. You're in charge of your own trading, not me, not someone in a chat room, not someone on TV, or not some convoluted indicator. It's you who have to make the choice to what to buy and what to sell, and that's how you become a consistent trader. So as you'll see today, I'm going to give you a very consistent entry technique for trading tops and bottoms in all markets. But before we begin, as always, we are first required by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Remember that all examples I'm about to share with you are strictly for educational purposes only. So as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already. I know I have a lot of followers, but if you haven't done so, I invite you to follow us on Twitter. There's our handle right there. Every day I post different information, from little bits of wisdom along the way to signals that our strategies have generated. So lots of great free information. Please feel free to follow us on Twitter. Now, as I stated at the very opening statements, we are different from most websites in the fact that our only purpose is to educate you. We are not here to tell you what market to trade. You know, I get emails on a daily basis where say, well, Steve, I love your presentations. What do you think is the best time frame? And I always say the best time frame is the one that makes you feel comfortable, because don't look at me to tell you how to trade, what the best time frame is, what the best market is. That's your choice. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what market or what time frame to trade. My goal is simply to teach you how to trade with the specialist edge so that you can make your own decisions. This is the same process that was given to me some 40 years ago when I was struggling tremendously. And I think this is the same process that has allowed me and sustained me to be able to trade for 40 years. So hopefully you won't be spending $10,000, $20,000 on useless material that really doesn't last and won't sustain you. Hopefully you'll be getting some sound fundamental education where you could be trading 10, 20, 30, 40 years down the road. Okay, this is what our sole purpose is, to educate you. Now, once again, this promises to be a great educational presentation, but since we are going to be conducting this like a class, if you're new to my presentations, we love to take your questions, but please wait till the end of the class to ask them, so we're not here for 3 or 4 hours. I know you're taking time out of your Saturday to join me, and I really appreciate it, but I don't want you to be here any longer than you have to. So please, if you have any questions, wait till the very end. I promise I'll get to them at the end of the presentation, and then we can move on after that, okay? So we have a good crowd here today. If you have any questions, you have to join us late. Remember, the only question I will answer is the most common, and that is this being recorded? Yes, it is. If you have to leave early, or if you can't hear my voice or can't see the screen properly, we will send you a proper link to this recording, okay? All right, so let's begin now. And once again, let me share with you how most people trade tops and bottoms. This is coming from firsthand experience. This is the way I was taught, okay? This is very simple, basic, but I would say it's trading 101. We're always taught to buy low, sell high, right? And that's the basic tenet of trading. Well, the way you do that is by adding some type of overbought, oversold indicator. It's the easiest thing to do. On any platform you go, there's always some oscillator or some overbought, oversold tool. For all intents and purposes, we're going to use something that's very common, and there's no secret to it. It's just a standard slow stochastic. It's just about on every platform, and it really wouldn't matter. It can be anything, okay? Anything that's telling you something's overbought, anything that's telling you something's oversold. That's the main purpose of this. Now, the way this usually works is that when we get into the so-called overbought area, when these lines seem to cross and look as if they're going lower, that's a sell signal, all right? A general sell signal. So you would sell somewhere around this area, and you have a nice little profit here if you're going short, or if you're out of the market, you would have missed all of this downward move. Now, when do we get back in? Well, we follow the same indicator. In this case, it's a slow stochastic, and then as we get into the so-called oversold area, right around these levels, we wait for the lines to cross, and that's our buy area. So if we're short, we cover our short, we made some money. If we're on the sidelines, this is where we get in, and look what happens. We're going up, so we're making money. But now we're still tracking the indicator, and now we're in the so-called overbought area, all right? So now we say, well, it's time to sell again. So I sell my long position. I made some money. Boy, this works great. Now I think I'm going to go short, okay? Because we're supposed to be selling, right? This is VRSN. So we sell, and you're all excited because you think, boy, I've had like 2, 3 good trades here under my belt. I just keep doing this all day long, and I'm just going to be a millionaire. I'm going to retire by the end of the month. So you sell, and this time it doesn't really go much lower. doesn't really take off to the upside, but you figure that's okay. I've got some money under my belt, and we kind of went a little bit lower, but now we're back in the overbought area. We've crossed over, so I'm going to sell some more. I'm going to double up. So you sell some more, and wow, this time it really goes up. So boy, okay, you've lost everything you made in the first couple of trades. You've pretty much given back all of your little cushion that you made. So now you say, well, boy, I've got to make it back. I better sell some more here. This is getting kind of serious. And it's got to work this time, right? Now we're really in the overbought area, and they crossed over, so you decide to triple up. So you sell, and this time they really don't go down that much, but they don't really, give you enough room to the downside to cover, because basically they just kind of went lower to sideways. And if you look at the indicator, it never went all the way into the so-called oversold area, so we never got a chance to cover. So now we're really short, and we're just a little bit higher from where we started. We're short 3 lots here, 1, 2, 3. Man, we've got to make some money here. We're going to, go all in because we got one last chance. So we're going to sell once again. This time, if we go quadruple up, we don't need to go down that far. All we need to go down is maybe halfway to be able to just to break even. So it's not going to be that bad. We'll just sell. After all, we've been overbought for what? For months now, right? All right, so we'll sell one last time, and this is where you start hiding your report, your invoices or your monthly statements from your significant other, because now you've lost all your money. You've probably lost all your little nest egg for trading, and you're not going to get that back, okay? Once again, this is the way most traders trade, myself included. This is the way I was taught, because you always want to buy low and sell high. So here's what my mentors taught me, because they saw how much I was struggling. They said, Steve, you have to grasp this concept, and you can't go forward and be a consistent trader until you do. And that was what they taught me. They said, Steve, there's no such thing as overbought or oversold. I know that's a very difficult thing for a lot of you to comprehend, but trust me, there isn't. Any market, anything you look at, stocks, futures, currency pairs, Bitcoin, everything can go up as high as it wants to. All right, there is no ceiling. Now, conversely, everything can go as low as it wants to. It can go to zero. Remember Enron? Anyone ever hear of that? So it doesn't, matter what market you're trading, what time frame. There is no such thing as overbought or oversold. We've all seen markets continue to go higher and higher, and all the time they've been in the so-called overbought area. All right, they've been overbought for months, maybe even years. And we've seen the same thing on the opposite side with oversold. So who are we to think that we can stand in the way of some huge, gigantic market and say it's going to stop here based off this indicator or this $5,000 system I purchased from this website? It's silly. And once again, I was taught the same way. This is the way I used to trade when I first started trading, and it didn't work for me 40 years ago, so it's not about to start working now. So it was very difficult for me when my mentors introduced this concept to me, but ultimately I did grasp it because I kept losing money holding on to the standard overbought, oversold mindset. And once I was able to let it go, I said, okay, I get it now. I see things keep going higher and higher all the time while they're overbought, and lower while they're oversold. So how do I trade then tops and bottoms? They said, Steve, there really is a right way to trade tops and bottoms, and it's simply to go with them. So I thought, how do you go with a top or a bottom? Well, this is the technique I'm going to be sharing with you today. Now, please remember, this is not a full-fledged system or strategy. In order to have all those pieces of the puzzles, you have to know where to place your stop, where to exit, money management rules. I'm just going to share with you an entry technique, but to show you this in detail, how strong this concept really works, okay? So please, if you're going to be using this for your own personal trading, please paper trade with this first so you can understand the concept. But it's very simple. Let's look at that chart once again in VRSN. All right. Obviously, we lost a lot of money. We were doing okay here when things were going our way, but then once we got to this point, we stayed in the overbought area. We continue to be overbought all the way up. So here's what my mentors taught me. And by the way, I'm going to show you how simple this is to apply on our new platform. All these examples, all these displays you're seeing right here are slides of our new PTS Primo charting platform. This is how simple it is to implement this technique. The first thing you want to do is to go to the upper left-hand corner here, the green strategy tab, and click on buy sell line. All right, once you do that, a drop-down menu will appear. All right, the buy sell line is simply the 50-period moving average. We have lots of ways to view this to help you with your trading, For this particular technique, we're just going to simply hit the 50-period simple moving average. And once you do that, it appears, okay? This is our buy-sell line. So how does this work? Well, you have to ask yourself, where is price in relation to that buy-sell line? All right, I'm going to say that again. In fact, you should write that all down, put it on a Post-it, and put it on your computer screen. Ask yourself, where is price in relation to the buy-sell line? Now, obviously, price is above, right? So if price is above the buy-sell line, we will never be a seller. That's how simple it is, okay? You are automatically, I would say, deleting about half or even more of the bad trades out of your history of trading, because you're on the right side of the market. You're not trying to fight it. You're not trying to stand in front of a speeding train and saying, you will stop right here. I mean, that's silly. You're simply going with the market. You're not trying to swim upstream. You're swimming with the current at your back. It makes trading a lot easier. You're going to sleep a lot better, and you won't have to hide your statements from your significant other, okay, as much. All right, so we're only going to be a buyer. This automatically deleted all of those negative trades here where we lost money trying to short because we're in sync with the overall trend. All right, so how do we trade this, though? So now we know what side to be on. How do we take advantage? Well, remember the concept, overbought, oversold. We now know and fully have grasped that there's no such thing as overbought, oversold, right? So we're going to exploit that. So what we want to do is identify all of the so-called overbought areas, this traditional overbought areas, because this is where we're told that the market is topping out. This is where you're supposed to sell, right? When something is overbought. Overbought basically means there's too much buying. It's over the limit. It's got to go the other way. Now we know there's no such thing as that. It doesn't exist. It's a myth. There's no reality to that concept at all. So what we want to do is exploit that. So we identify all these overbought areas. And then once we identify them, we locate all the little tops that were created while we were in the so-called overbought area. See, top is like a little high, a little higher high, and a lower high. That's a little top. And then we went higher, made another top, went higher, another top. So we want to identify all these tops. So you can draw a little green line here if you like. But that's what we're going to buy once we trade above them. So this is the entry technique. Had we taken that very first setup, we could have potentially been able to capture 14 points to the upside instead of losing all that money trying to pick a top off of traditional overbought areas that hold no consistency. So do you see how simple this is? We're just going with the market and we're exploiting the way most people trade. Now let's look at the other side of the coin. Let's look at that first chart we shared with you in LB. All right, remember once again, we would have lost a lot of money trying to pick a bottom here. And this is the way most traders trade. They'll pick a bottom here, 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 until finally they've lost all their money. What's the first thing we do? Well, we know as traders never to try and pick tops and bottoms. We understand that concept now because there's no such thing as overbought or oversold. So the first thing we do is click on the buy sell line. All right, the drop-down menu appears. We click on 50-period moving average, and now it automatically appears. And now we ask ourselves, where has price been in relation to that 50-period moving average? Well, it's obvious. Price has been below, right? So why would we ever buy anything that it's below the 50-period moving average? I mean, it really is silly to think that you can try and pick a bottom. Why not just go with it, swim with the current at your back? So we know now that price has been below, way in advance, way up here. All right, so instead of exploiting overbought, what we want to do is exploit traditional oversold areas. So as you see here, using this particular tool, and remember, once again, it's not required to use the slow stochastic. You can use any indicator, any tool. You can use what somebody says on TV as something being overbought, oversold. That's all that matters. It's just something that indicates something has gone up too high or gone down too low. It doesn't matter if it's some guy in a chat room or some indicator or something else that's telling you that. In this case, we're just using the slow stochastic, but this is not a system that requires that you must use that tool. We're just going to exploit oversold areas regardless of how they're generated. All right, so we identify where they all were right here, and look how many times this indicator was telling us the market had gone down too low. I mean, was there any consistency in trusting in that? That's silly. Had we trusted it right here, it'd gone down too low, well, we would have lost a lot of money. Let's exploit it and locate all of the short-term lows that are generated in those so-called oversold areas, right here, here, all right? So we know that once we trade below them, one tick below, we can short. Now you can obviously short the stock, you can buy puts, but had you taken the very first one, you could have captured 40 points to the downside. Instead of losing a lot of money trying to buy a bottom, you're in sync with the market and you're making money going with the market, okay? So that's the basic concept. Let's show you some more examples in all markets, different time frames, okay, just so you can grasp this concept. But please remember, I'm teaching you this today. This is something I learned some 40 years ago on the floor, but the same thing my mentors taught me is the same thing I'm going to give to you, is that don't just jump in. I know a lot of you think, wow, this is amazing. I'll start trading this Monday morning. Don't just jump in. I would suggest, and I would actually recommend and require that you paper trade first, because there's so much you learn more in real time from without using real capital. So paper trade and practice first if you're going to be using this with real capital. Excuse me. Let's begin now. Let's look at ABC coming into this past week in January. Okay. Now obviously it's been going up. If you have been trying to sell this, you would have lost a lot of money, right? Thinking that it's going down. But this is the way most traders trade, right? They're always told, oh, it's way too high. You've got to sell this. Well, first thing we do is add the buy-sell line. And coming into the end of November, we were below, so we were only looking to sell. But at this point right here, we stuck our head up above, and then ultimately we were above the buy-sell line. So this is where we knew way down here that we're only going to be buyers. We're not going to be sellers, okay? So what do we want to do then? We want to exploit the so-called overbought areas because we know they don't exist. There's no validity to them. Now, even though we just ticked our head above here, if we look and try to identify all the tops that were created in the so-called overbought area, this very first one would have had you entering above the buy-sell line. So this is actually valid. Even though we had 2 or 3 bars closed below, this is still a valid entry point. Had you taken that very first buy setup, you could have potentially captured 16 points to the upside coming into this past week, okay? That was in ABC. Let's look at HCN. Once again, had you tried to pick a bottom in this, you would have lost a lot of money, but had you simply added the buy-sell line, which I taught you today, well, guess what? You would have known as far back as September that you should not be buying this stock. And this is coming into the same week in January, all right? So we look at each individual stock for what it's doing. Where ABC was going up, making new highs, HCN is going down, making new lows, okay? So, you don't have to, if you don't want to, look at the market as a group. Take each individual stock for what it's doing. If this stock is below the 50, then you're not buying it. I don't care if the rest of the market is making new highs. It doesn't matter. Don't buy anything below the 50 period. And you knew that well in advance. You knew that way back here in September. Now, it doesn't cost anything to find this out. You don't have to purchase a $10,000 system to find this out. You don't have to take a course that costs thousands of dollars. I'm giving you this for free, what my mentors taught me 40 years ago. If price is above the 50, you're only going to be a buyer. But if price is below the 50, as we see here, you are only selling. So how do we take advantage of this? We identify the so-called oversold areas. All right, so we're oversold right here. Now we want to identify where the bottoms were. These are the short-term bottoms that were created. And once we trade 1 or 2 ticks below, that's your entry point to go short. Now, had you done that in late September, well, that's 10 points to the downside coming into this past week, okay? Now, remember, you don't have to use this as a trading tool. You could have used this as just a ways to stay out of the market. Once you're below the 50 and you see here, oh, okay, we're breaking below these short-term lows here on an oversold, so-called oversold level, boy, I'm really going to stay out of this. So this is a way to not only have you trading, but you can use this as a directional tool to stay out of a particular stock. All right, look at BA, Boeing, okay? Obviously, if you were trying to short this, you would have lost probably everything. All right, this market just continues to make new highs coming into this last week in January, all right? And we've known, as going back as last summer, that you should only be long this stock. Why? Because it's above the 50-period moving average. So you don't need to look at, if you don't want to, why overcomplicate your trading by looking at the earnings, by going to a chat room and seeing what some so-called advisor knows what this stock's going to do, or reading reports on Boeing company. I mean, why overcomplicate your trading? All you have to do is look at the 50-period moving average and say, Well, I don't need to over research things and over trade. It's just telling me it wants to go up, so I'm going to be a buyer. I don't care what the news is, or I don't care what the earnings are, or I don't care what the CEO says, or I don't care what the economy is doing. If this stock is above the 50, I'm a buyer. That's all I need to know. I don't really need to know any more information. All right. So we knew that going back to June. Now look at all the so-called overbought areas. These are traditional overbought areas. All right. How well did they work? Okay, not very well, right? If this indicator is supposed to be so great, how well did it work in telling you that this is overbought? Not at all. So we want to exploit that. All we have to do is now locate all the short-term tops that we created. And had you taken that very first one way back here in June, guess what? Coming into this past week, you would have had 130 points to potentially capture. All right, and we're not teaching you where the exits are. This is not a full-fledged system or strategy. This is just an entry technique. Let's look at an entirely different market. I know not all of you trade stocks, so let's look at the E-mini S&P, and we're going to go down to an hourly time frame. Okay, this was just last week, a week or so ago, January 10th. Initially, the market was below the 50-period moving average. Now, nothing changes just because we went to a different market or time frame. The same rules apply. So we're below the 50. That means we're only going to be a seller. But we haven't gone below this level. And then right here at this point, around 6 a.m., right around the opening, we're starting to go above, all right, the 50 period. So now we're turning into a buyer. We don't care what some news is coming out or some jobless claims are going to be. It doesn't matter. The market's telling you that you should only be a buyer. Why? Because you have consistent closes above the 50-period moving average. And where people would say, but Steve, look at how overbought this is. Well, if we're going to use this tool to help us find out when something has gone up too high, how well did this work, okay? Look how well this works. It's telling you the entire time, well, it's overbought. It's overbought here. It's now even more overbought here. Now it's really overbought. Now it's completely overbought. You see how silly it is to try and use this, or some guy on TV telling you that the market's too high or too low? Remember, there is no such thing as overbought or oversold. Once you let go of that concept, your trading will become more consistent. Okay? So now we're going to exploit this so-called overbought area, identify all the little tops that were created in that area, and then if we had taken the very first one, which has the most bang for its buck, we could have potentially in just a couple of days been able to capture 37 E-mini S&P points. That's roughly over $1,800 per contract. Okay? Now that's an hourly chart. We can go down to a 10-minute chart. All right, let's go down to an even smaller time frame, right around the same time, January 10th. At this point, we were above, so we're looking to buy. It doesn't mean we just simply buy at the market. This is one thing I always explain to new students. They say, well, Steve, I had 3 closes above the 50 period, so I bought at the market, and then it went the other way. Remember, that's just telling you what side of the market to be on. You still have to add some structure, okay? In other words, imagine you want to go sailing on a lake, and you have a nice breeze or a nice wind, and so you jump into the water and say, well, how come it's not taking me? Well, you need a boat. You need some type of a raft or a canoe, some structure in order to use that wind or use that breeze to take you. You can't just jump in the water and think, well, I'm going to glide from one end of the lake to the other. It's the same thing with trading. Just because we're above the 50, it doesn't give you full right to just buy at the market. You need some structure. You need a boat. You need some type of plan that tells you when to get in and when to get out. Well, we do have a plan here. We have what we're teaching you, this entry technique. Now, at this point, we crossed below the 50, so now we're only going to be a seller. If we're a seller, we exploit the so-called oversold areas. Now, this is a 10-minute chart. Same rules. Nothing differentiates because we're in a different time frame. So here's the so-called oversold areas. We want to identify now all the bottoms that were created. One right here, here, here. Had we taken the very first one here on January 9th, well, that's 12 points to the downside in like 2 or 3 days, or actually just two days. That's $600 per contract. Once again, extremely simple. Why? Because we're not listening to all this outside information telling us, oh, well, the jobless claims are this. Oh, well, we're so overbought. We can't buy anymore. Oh, we're so oversold. Or this guy in the chat room told me this. This is the way most traders trade, by getting all this useless noise, what my mentors called, and trying to figure out what it means. Forget all of that and just listen to the only thing that you should be, which is a source. It's the chart in front of you. and it's telling you it wanted to go lower in this 10-minute time frame. Now, it doesn't matter if the hourly time frame is above the 50 period. I know a lot of traders say, well, Steve, how can I go short on a 10-minute if the hourly is above? Remember, only trade the chart you're looking at. I don't look at two chart and time frames to tell me what to do. If you'd like to, you can, but in my 40 years, I found no consistency in that method. I know there's so many websites, so many educators teach that, say like, well, if you're going to trade an hourly chart, the daily chart and the hourly chart must be in sync with each other. Well, I tried that 40 years ago. It didn't help me. All it did for me was keep me out of a lot of trades while I was waiting for the two to line up together. And then when they finally did line up, I missed that trade that I wanted to take because they were out of sync. So if you want to, you can trade that. Once again, we're not here to tell you how or how not to trade. But in my experience, there's no consistency in using that. Only trade the chart, the time frame you're looking at. Don't worry about another time frame of another chart. Don't worry about another market that's validating it. Everything is validated in front of you on the time frame you're looking at. Now, the last market we're going to look at is a Forex market for all you currency pair traders. All right. Now, initially, we were below the 50-period moving average on this daily chart of the Australian dollar. So, obviously, we're sellers, right? We're not going to buy anything. And what do we have here? We have so-called oversold area. So this is where we want to go short, right? If we trade there. Now, people would say, well, Steve, I don't understand why you didn't go short. And, you know, I know it went up after that, but you would have lost a lot of money. Well, no, because remember, we need to trade below that. And as you can see, we created that short-term low in the oversold area, but then we never went back below it. See, we would have gone up higher, and then had we gone back down lower, that's our signal to go short. But we never did. And once we started to go higher, then about a week later, what do we have? Consistent closes above the 50. So now we change our course, and now we're only a buyer. If we're a buyer now in the Australian dollar, then we're going to exploit the so-called overbought area right here. Okay? So all we do now is identify the top. So there's one right here, another one here. And had you taken the very first one, that's over 200 pips or roughly about $2,000 per contract to the upside in just about, a couple of weeks coming into this past week in January. Simple, see? Showed you the same thing in stocks, intraday futures trading, and now currency pair trading. Now let's even go to a different time frame. Here's a monthly chart of the same currency pair, the Australian dollar. This is going back to 2011, going back some 7 years or so, 8 years almost. As we can see, we were initially above the 50-period moving average. These are monthly charts. Nothing changes because we're looking at a monthly chart. So we're only going to look to buy here, but we never went above the so-called overbought area. So we couldn't exploit anything using this technique. It wasn't until May of 2013, some 5 years ago, that we started to come below and have consistent closes below. So now we're a seller. We knew back, if we were investing in the Australian dollar, we knew 5 years ago that we're not going to buy this. We're only going to be a seller. So we identify all the so-called oversold areas. We locate all the short-term bottoms. And once we traded 1 or 2 pips below, that's our indication to get into the short side. Now this would have generated 2,000 pips to the downside. Okay, so you would have had that potential to be able to capture 2,000 pips. Okay, $20,000 per unit. I'm not saying you would have, but that's how much you had to work with. Just using the simple technique with not a ton of indicators, only using 2 indicators, a 50-period moving average and an overbought oversold tool, and then just looking at price. That's all you're going to have to do. All right, so remember what my mentors taught me. You first have to grasp this concept, but it's so important. Go back and look at your charts. Go back and, in fact, look at your losses. Most likely you were selling when something kept going higher and higher and higher, or you were buying as something kept going lower and lower and lower. This is the way I used to trade. Every once in a while it would work fantastically, and I think, boy, I'm right back on track. I'm going to make money now. This is working. And then the next trade I'd buy something and it went lower and lower. I'd buy some more, it went lower, and vice versa. So remember, there is no such thing as overbought, oversold. It will work every once in a while until it doesn't. And then you give everything you made back. So why trade like that? Like a roller coaster where you're riding high in April, shot down in May. It's no fun, a lot of sleepless nights. You're hiding your statements from your significant other, and then you're thinking like, boy, this is not fun. I thought it was supposed to be fun trading. Why not be in sync with the market? So there is no such thing as overbought, oversold. Once you grasp that concept, then you'll fully understand that you should never, ever try to pick tops and bottoms in the traditional sense. It's a recipe for disaster. There is, there are very few traders that are able to do this on a consistent basis because they're seeing something that the majority of all traders, myself included, can't. So why not just do something rather than try to be like the 1 or 2 percenters, and it's very difficult. Why not just go with the flow and have a lot more consistency? This is the commitment I made some 40 years ago, and I really believe this is what's been able to sustain me now for 4 decades. Okay, so as we go into the question and answer portion, I want to ask you, do you think that this edge could have helped your trading this past year? Remember, go back and look at the trades, the ones most especially that you've lost on. Most likely, you've been selling above the 50 period and buying below the 50 period. Well, we have a great offer for you today. For all the attendees taking time out of their Saturday morning, we have a great special attendee discount. Remember, everything I shared with you today was generated and was displayed on our new PTS Primo charting platform. It took me over a year to design this with Pro Trader Strategies, my sister site, but we're very confident about it now because we really feel it is your premier trading educational platform. Remember, we're all about educating you, and rather than having to educate you and not spend that much of a time with your learning curve, hopefully not even 40 years, hopefully you can learn all the things we've put into the charting platform in a matter of months. This is what we've done with our charting platform. Everything I've accumulated in my 40 years of trading. And we really feel that finally this is the trading educational portal that you've been searching for. Let me show you what's offered in this really great offer. We're going to give you 30 days use plus a full-fledged strategy for trading with the platform. All the rules, all the buy and sell signals for only $7. Okay? This is strategy number 1, probably our most consistent pullback strategy. Now, what I shared with you today was just a technique. Strategy number 1 is entirely different. So you can practice this technique as well as use strategy number 1 for only $7. Now, we're not going to just stop there. We're also going to throw in the buy-sell line. Remember the 50-period moving average, and then when you had that drop-down menu, you saw other categories, ways in which to display it. Well, one of the best ways in which to display our buy-sell line is with our background feature, because oftentimes traders will enter the market too late. Here's an example here of a news event in this particular stock. This was in the QQQs where some news came out, and the markets went up higher after that. But this is where traders mostly will enter, because they say, well, Steve, I didn't know we were going to go much higher until that news came out. But with our buy-sell line feature, which is our background feature, it will paint automatically the back of your screen when you click on the desired category, either reddish, orange, or blue. And this is the way we tell our students to apply this. A red sky at morning means the trader should take warning. That means you don't want to buy anything if the stock has a red background. But a blue sky at night means higher prices in sight. So once you apply that technique onto the screen here by simply clicking on that background feature, you would have known well in advance way back here that you should only be a buyer, and you wouldn't have had to wait months for this news to come out to tell you that it's okay to buy the markets, okay? That's included. But we're not just stopping there. We're also going to give you all these different signals generated using strategy number 1, different techniques for discerning what the short-term trend is. But I think one of the best things about this 30-day $7 trial is that we're throwing in our scanner. Okay, let me show you how simple it is. If you like to trade strategy number 1 or look at any of our techniques on a daily basis after you come home from work, you would simply open up the strategy scanner page, click on load symbols, and we give you a list of symbols anywhere from top ETFs, strong markets, S&P 100, NASDAQ 100, and whatever you choose. It can even be your basket of stocks that you like to look at. They will be posted here in a matter of seconds. Then you just simply click on scan. And in about 10 seconds, you'll see a series of either green or red bars. The green bars simply mean that there is a buy signal in the corresponding stock. The red bars signify a sell signal. And this process takes about 30 seconds. That's all you have to do each night. And then you'll know the list of stocks that are generating signals. All right? Once again, we really truly believe that this is the trading educational portal that you've been searching for. Everything I've accumulated in 40 years is here, one click away. So here's how to take advantage of this. Remember, this is an attendee discount for all the Saturday attendees today. It's going to be $7 for 30 days. This is for a limited time only. All right, contact Pro Trader Strategies. You can either email them, call them directly at 310-598-66. But that link at the very bottom is the link you want to go to. Okay, now I don't believe it's a live link, but if you look in the chat box on the far right, they've just posted the link there in the chat box. It will take you to that $7 sign-up page. If for any reason you're having technical difficulties, say the site crashes because there's too many people, we have a good crowd here today, don't worry, you can always contact Pro Trader Strategies and they will set it up for you over the phone. They have trading consultants manning the phones right now. Remember, call 310-598-6677 if you have any other questions, okay? Now, I'm going to leave this information up here. I want to thank you all for holding off on any questions, and I'll open up the question and answer box right now. Let's see, question, does it work on intraday? Well, I showed you, maybe you came in late, but I showed you 2 intraday examples. It works in any market, any time frame, and any direction. In fact, all of our methods, with maybe the exception of maybe 5% of them, work in any market, any time frame, and any direction. That's the beauty of a consistent method. You don't want a method that says, well, this can only work on an hourly time frame of the Canadian dollar. You can't use it with stocks. We don't believe in that. If something works on a 5-minute time frame of the E-mini, it should work as well on a monthly chart of Apple or a weekly chart of the Australian dollar. And that's what these techniques do, okay? Neil is asking, what are the settings on the stochastics? You know, Neil, I'm sorry, I don't really go into the inner workings. Remember, this is not a system. I don't want you to think that, well, I have to have these stochastics. Just use the slow setting. I didn't look to see what they were. All I did, I virtually just clicked on slow stochastics, okay? It's just about on any charting software package. Neil says he's already a subscriber, but he's a little frustrated trying to navigate it. Are there tutorials? Oh, sure. Neil, you should have gotten a lot of tutorials. There are tutorials. I would contact Pro Trader Strategies if you have your trading consultant, but we have, boy, upwards of a good 5-10 tutorials that show you exactly how to start trading, what to look at, how the things work, and they should have supplied them with you. Maybe they did and they went to your spam folder. If you can look at those, but those come with even the $7 trial. So I would contact Pro Trader Strategies and they can set that up with you right away, okay? Jonathan asks, can I use your chart with any broker? Well, yes, but please remember, these are, we are not a brokerage firm. In other words, you cannot trade off of these charts. These are simply a supplemental educational platform that you have alongside of your current broker platform. So what a lot of our members do, and all over the country and all over the world, is they have, let's say you have, you know, just throwing something offhand, an E-Trader, and then, you know, on one screen, and then you toggle back and forth to see where the signals are generating on our screen. And then once you see, you know, what you want to do, you get a signal or you find out that something is in line, then you just toggle back to E-Trader and enter your order. That's how simple it is. I'd say the majority of our students trade that way, okay? Pradeep says, how do you trade this technique on consolidation? Well, remember, don't overthink this, Pradeep. Don't think in terms of consolidation. Don't think in terms of overbought, oversold. Just look at the chart. If there is an, you know, if you're in consolidation, chances are you're not creating an overbought or oversold area, right? Chances are whatever indicator you're looking at is not overbought or oversold. It's just consolidating, kind of going in a whipsaw. So you won't get a signal. So there's no reason to overthink and say, well, what about consolidation? What about earnings? What about, just look at the chart. Everything comes from the chart, okay? Jonathan says, is the 50 period a simple or an exponential? Good question, Jonathan. It is a 50 period simple moving average. Now remember, it's not our job, it's not our purpose to tell you how to trade. Some of our students say, Steve, I love this, but you know what? I use a 48 exponential. That's fine. The whole purpose of the buy-sell line is not to tell you when to enter, not to tell you when to sell. It's just to tell you what side of the market to be on. That's the main purpose. It's not a strategy. It's not a system. It's not an entry tool. So if you want to use an exponential, that's fine. I just have to tell you, though, I've been using this for 50 years. And in my 50 years, nothing works better than a 50-period exponential. Trust me, I've experimented with everything. A 50-period simple, excuse me. I've used exponential, 20-period exponential. I've used 34. I've used Fibonacci ratios. I've used weighted, a moving average, displaced. The best for all markets and time frames is a 50-period simple moving average. But feel free to study. In fact, we encourage you to research this. This is what we want. Remember, I said in the opening, you're in charge of your trading, not me. I'm sharing with you things that have shown high levels of consistency in the last 4 decades. But if you feel you want to take them in another direction, another step, well, great. That's what I want, because that's for the first time showing yourself that you're in charge. You don't have to rely on some system. You don't have to rely on some guy in a chat room. You should be making your own decisions, okay? See, Steve is saying, Steve, I bought your charts on a trial basis. I love what I see so far. I make sure I listen to all of your webinars and become a better trader with each one. Thanks. Great, Steve. Thank you so much. That was an unsolicited response here from one of our attendees today. And remember, we're trying to educate you. I don't want you to think that we're coming here and we have a master system or a master plan that's going to have you retire in 6 months. We don't believe in that. And as I often say in my presentations, if you ever hear someone or you ever see an advertisement for that, you should run, because there's no guarantee in the markets. The only thing we're trying to instill is sound fundamental education, mentor you along the way so that you can make your own trading decisions. We're not a signal service site. We don't believe in just providing you with signals so that you can just blindly take them. We don't believe in that, because once again, you're doing the same thing you've always been taught, which is to take yourself out of the game. What we do is we provide signals as a way to check your work, almost like taking an open book test, so that you put the answer in what you think it is, and then you look at the back of the book to see if you're right. Well, it's the same way with the signals we provide. We want you to identify and locate these signals, but then we want to check to see if you were right or not. Okay? After a while, most of our students don't even rely on our signals anymore, because they know what to look for and what not to look for. That's great education. That's what makes a consistent trader. Remember, this is a great offer, $7 for 30 days. At the end of 30 days, you're not satisfied and you think, well, this is not my cup of tea. It's not really the way I trade, Steve. I appreciate it. That's great. There's no obligation. You don't have to stay on for the next year. You're not locked in. You can cancel, and that's fine, okay? If you decide to, there's a very inexpensive price. I believe it's less than $90 or $94 to continue on a monthly basis. But that's entirely up to you. You know, just try it for 30 days at $7 and see how you like it. And remember, once again, in that 30 days, you have access to my personal email. You can always contact me with any questions if you don't fully understand something. And remember, there are different data feeds for different markets, but contact Pro Trader Strategies. If you have questions about which exchanges or which data, they can answer that much better than I, because I personally am the teaching and trading aspect of the company. Pro Trader Strategies handles all the tech support, data, videos, webinars, and that section of the company, okay? All right, as we conclude here, I hope you got something out of it. Remember, my last requirement is that you paper trade this technique. If you want to trade with it, paper trade with it, and you'll really see and grasp that concept that there is no such thing as overbought or oversold. That's the most important thing I want to pass on to you today. Once you grasp that, I really strongly believe, in my opinion, your trading will increase substantially, okay? So as your mentor, I want to increase your odds for success. I hope you join our PTS Primo charting platform here. The $7 offer is going for a short time, so take advantage of it. And thanks so much for attending. Have a great weekend, and I'll see you next time. Bye-bye.